Good morning from paradise. My name is Crypto Amaru. We're back with another daily session here. It's Tuesday, March 4th. We're talking trade war. Maybe we'll call this Tariff Tuesday. And we'll talk about how this so-called trade war is going to affect crypto, Bitcoin, altcoins, etc. How are we going to get out of this mess? And what can you do to manage and get through this volatile time? So, all right. I thought for a moment yesterday that Trump may pivot last minute. You know, there were negotiations going on in the background between Mexico and Canada, and they would have come to some accord, and they would have either canceled the tariffs, postponed them, or done a more targeted measure. That's not what happened. He went forward with the full-blown tariffs. And obviously the markets reacted accordingly. Markets don't like tariffs. Tariffs are trade taxes, import taxes. They should really just call them taxes. That's what they are. And they, normally, historically, they do two things. Adverse things. There are some positive to them. But the two bad things about tariffs is that they typically increase inflation because the cost of goods go up. As companies that have to import those goods, they're paying a tax. The only way to still make profits is to increase the cost of their goods. So costs of goods go up. That means inflation goes up. And the other thing that they can often do is slow growth, because now things cost more. People want to spend less. So typically not really great for your macroeconomic outlook. On the positive side, and we have seen some evidence of this, they do incentivize companies to onshore businesses back to the U.S. That is a good thing, right? So there can be some positives from it, but import taxes, aka tariffs, typically viewed as bad, and obviously the market reacted accordingly. We're now down. And so a couple questions that I want to address, or a couple of insights, right? Why is it that when Trump announced the crypto strategic reserve, and we pumped and so on and so forth, that we immediately crashed back down again? Well, the answer, I think, is that in this environment that we're in, and remember how integrated crypto is now into the wider financial markets. The ETFs, they're sort of a double-edged sword in that sense, right? Wall Street can now invest into these ETFs. You can do it through your brokerage account now. That's wonderful in many respects, but it means that crypto is really now, very much correlated with the stock market, equities, etc. And so when you have a risk-off environment like we're in now, that obviously affects crypto. My thought, after having observed everything over the past few days with the crypto strategic reserve and now the tariff war and where the markets are heading, the macro situation, the macro outlook is still much more important and impactful than crypto-specific news. So we kind of have to get outside of our bubble sometimes. I think we live in a bubble on crypto Twitter. We're talking about very crypto-specific topics sometimes. We get maybe overexcited about them. We overinflate their importance. And you end up ignoring kind of the bigger picture to your detriment. The great example of this is SEC dropping all those cases. Well, in a neutral market or a uptrend, I think those announcements, you're going to see 20% bumps on Uniswap's token overnight. You normally expect to see this in positive market reaction to SEC dropping cases, but you really didn't. And I think that's because crypto now so integrated with the wider financial markets, the global markets. And when you have tariff wars and everyone's so fearful of what's to come, it doesn't matter what crypto-specific bullishness is going on. So that's, I think, it kind of explains why we haven't done better despite the positive news. But I'm not all doom and gloom here, right? We know tariffs, typically not great, but I've been on record saying we really don't 100% know what the impact of these tariffs are going to be from a financial markets standpoint, and that's because they are being enacted within a wider context of other policies that may or may not be inflationary or deflationary. And so I want to talk about the path forward as I see it, kind of the bullish. Let's talk a bull case first, right? And then we'll talk a bear case. The bull case, I think, is that tariffs perhaps hurt growth somewhat. We don't want it to hurt growth too much because then we tip into recession, and that's also bad for markets. So we need a bit of a Goldilocks sweet spot of hurting growth a bit, but not too much, and not being too inflationary. Right? We don't want to see inflation go back up. And the interesting data came out from I think the Atlanta Fed, that the regional office, the Fed in Atlanta. Study came out saying they're actually projecting negative 1.8% growth. So negative growth, I believe, is what the number was. I'll have to pull that up. But that signals to me that the Fed will likely be cutting rates. That's the bottom line. That's the bull case. The bull case is that these tariffs and perhaps the other policies enacted by Trump ultimately lead to the Fed needing to cut rates because growth has been stymied and they need to accelerate the economy. And of course, their one lever to pull in that scenario is to lower rates. And so you're already seeing today that traders, speculators are actually betting now 3 rate cuts this year, up from 2. A few weeks ago, everyone was thinking just 2 rate cuts. And now the impact of the tariffs, you see the financial markets reacting, more fear, more uncertainty. That normally equates to lower growth. And you could then have the Fed reacting to that by having to cut rates more aggressively and more times. People are betting that this is going to happen. And so that would actually be a bullish outcome for crypto, as we know that crypto is very correlated with the money supply, quantitative easing. In that environment, crypto tends to do very well as a risk-on type of investment. And so that would be the bull case, that tariffs, perhaps, there's going to be some good, bad, the ugly of them, and we've already seen that. But the long-term story around that would be it sort of indirectly leads to lower interest rates, and that would be great for crypto, right? And you already see, I'll just, a little bit more on the bull side, you already see China. They're suffering now with low growth, and they're not moving necessarily into recession as I understand it, but they're perhaps teetering on that precipice. And do they need to inject stimulus into their economy to counteract their weaknesses? My guess is probably yes. There is apparently around $7 trillion in money between like corporate balance sheets and investors and essentially all liquid capital sitting on the side here, $7 trillion worth. Eventually, it's going to need to get invested. And so I think we need to get through this scary time, this fearful time, a lot of change, very fast change, creates a lot of uncertainty. So, of course, the markets are reacting how they are, but eventually things will stabilize, right? The impact of the tariffs will slowly be circled through the economy. They'll be jettisoned. We'll see ultimately what happens long term with these tariffs. It could end up being short term. But so suppose worst case, slowly that impact is kind of dispersed through the economy, and you see everything sort of calm down or slow down from a news standpoint. Some confidence starts to creep back in the markets, and people will start deploying capital again. And again, the bull case would, of course, be this provides Fed the cover to cut rates more than twice this year. You already have Scott Bensett, who's part of the Trump administration, going out on Fox News and wherever else saying, hey, they're pushing for lower rates this year, which would be great. That would be great for a lot of businesses, for the economy. We've been suffering under these high rates for multiple years now. So that would be a welcome reprieve, no doubt about it. So let's see if that plays out, that kind of best case scenario over the next few weeks and months. We'll see the inflation data come in. We'll see the economic data come in, job losses, etc. And the Fed will be looking very closely at that, and they'll be making decisions whether to cut rates sooner rather than later and more times than perhaps people had expected even a few weeks back. So that would be the bull case. Quantitative easing. This causes quantitative easing to come back. Bear case to me is we have, worse economic impact than perhaps we anticipated from these. Now, remember, these tariffs went into effect, China, Canada, and now Mexico are also announcing their own tariffs. Not good for our companies, right? Companies in the U.S. And so, does this ultimately lead to a full-blown recession? And despite the fact that the Fed is going to cut rates, do we move into recession because this just was too much, too fast, and we just went overboard and couldn't handle it? I mean, there's a lot of risk to what Trump is doing. Let's just be honest about it. He doesn't really know what the outcome of this is going to be. No one really knows the outcome of this is going to be. There is a lot of risk when you're talking about big, fast, dramatic change, and that's what's happening. So could we tip into a recession? That hurts earnings, that hurts stock prices, and that bleeds into crypto markets, and everyone's feeling very down and risk off and recessionary vibes. We could tip into that. We could go too far in that direction, and that would be a bearish scenario, right? Let's see how it plays out. My guess is that between Fed cutting rates and what is hopefully being announced this week around the crypto strategic reserve and the shock of these tariffs sort of weighing, sort of lifting the initial shock, dissipating a bit from everybody's minds, that we eventually start to climb out of these bottom barrel prices, this very bearish, extreme fear environment that we're in crypto. It's not going to last forever. We know that. We've been on record many times saying that we do not believe this is the start of the dreaded crypto winter, a multi-year bear market. This is most likely a correction, scary correction, but a correction, and standard correction, I should also say, because they happen often, in a bull market. It's probably that, right? And so, in all likelihood, we start to climb up out of this as the shock of the tariffs wear off, as the reality sinks in that the Fed is likely going to have to cut rates more times rather than less times this year. And we hopefully do not see inflation rear its ugly head again. That's the other X factor. Inflation starts to go up because of these tariffs. The Fed's hands are going to be tied and they won't be able to cut rates. That would also be a bad, bearish, and disastrous scenario. So fingers crossed, we are in uncharted territory. And there's a lot of uncertainty right now. So what does that mean for you guys? Well, for one, we never recommend people go out and play with leverage trading and putting in, try to do leverage longs or shorts in this kind of extremely volatile environment. I mean, you saw the most volatility over the past few days, I think, than I've ever seen in my, tenure here in the crypto space. You had a, crash essentially on Thursday or Friday last week when the realization that the tariffs were going to move forward happened. Then you had a mega pump, another 10% run on or more on Bitcoin, and ETH was up 15, 17 or something percent when Trump announced the crypto strategic reserve. And then the very next day, Monday, when the tariffs do go into effect, or when it's sort of reinforced they're happening, you see a crash down. I mean, the volatility is insane. And so, unless you're like that guy that had somehow, that obviously had insider information, you guys know the guy I'm talking about, putting in a 50x long right before the crypto strategic reserve gets announced, and then putting in a short as soon as made money on that, knowing that Trump's going to announce the tariffs. Unless you're that guy, don't try to do leverage trading. Way too risky. It's way too volatile right now. Nobody knows what's going to happen next. You don't know what's going to happen next. No one knows what's going to happen next outside of the inner circle of Trump. So don't mess with that. If you were smart enough to take some profits at 100,000+ Bitcoin, and when ETH was around 4,000 or whatever, God bless you. Great. I would either start, just stay sidelined, perhaps start buying the dip of your favorite conviction bags here at these lower levels. That's perfectly fine. If you're just hodling along, I don't think you should sell here. Not financial advice as ever, but it doesn't make sense to me to take a big loss if you can just be patient and wait, a few more months, wait for the dust to clear, so to speak, the dust to settle, and I think the markets will be back in an uptrend in a few months here at the very least, and maybe even sooner, maybe by Friday, right? We have that big press conference coming, the crypto strategic reserve, likely more details around that coming. So, I think we just got to get through this But yeah, don't mess around with leverage. Way too risky in this environment. Just, man, if you've been hodling through this craziness as I have, I think you just got to keep doing that, because selling at a loss, to me, doesn't make a lot of sense, unless you feel like, hey, we're moving into a crypto winter here, which we do not. So, not financial advice as ever. You got to do what's comfortable for you. There's a lot of uncertainty, a lot of risk here. I just wanted to talk to you guys about how I see a bullish path forward, with ultimately these tariffs sort of indirectly leading to the Fed needing to cut rates, and that we embark on a sort of era of quantitative easing or easy money, whatever you want to call it. That is the bullish case for me, and let's see if it plays out. But stay cautious out there. Stay following the channel. We're going to come out with daily content. We'll work through this together. We'll talk it out together. And until next time, guys, we'll see you on the beach.